All right. Thank you, George. Got 21 minutes in green because we're the only ones that can see the screen. 21 minutes in green, green up only. I'm Tim Kotzman. I run Bitcoin Treasuries Media along with its president, Ed Julien. I've founded or co founded a number of podcasts, live streams, and digital conferences, including the Bitcoin Treasuries podcast, the Hurdle Rate podcast, Bitcoin Treasuries Digital Conference. A couple of fun things over the past year that people seem to enjoy is that what you're about to hear may be amazing, but it's not financial advice. So we got that covered. And also,
Yeah, hi, it's Stefan.
we're so early, but there's so much to cover. 21 hours straight interviewing 46 people. Like, there's a lot to cover. So I'd love for all of us to do quick introductions and really keep it kind of loose. Like, anybody can ask anybody else a question. So if something comes to mind, the things that I'd really like to cover, the rise of Bitcoin treasuries. Maybe there's, like, we'll add on to it. We are early. So the three things I'd love to cover is, like, what are the companies? What's the point? Why are we here? What are they supposed to do? What are the metrics? What are the wrong metrics? Or is it too early to even have any standard metrics? And the third thing would be, what are the options? Like, what are the best things for these companies to do, right? Creating yield. Some of the things have been mentioned on other panels already, but, like, what is the highest and best use of a Bitcoin treasury company? So throw it over to you, VJ.
Yeah, I'm VIjay Selvam. I work at Gemini. I'm the international general counsel there. I'm also director on a couple of Bitcoin treasury companies,
Okay.
Future Holdings, which launched last week, founded by Richard Byworth and Adam Back, and also one of the first UK Bitcoin treasury companies, XCE, Connecting Excellence. And it says Principles of Bitcoin. I'm the author of Principles of Bitcoin. So that's me.
Of course.
I'm Wyatt. I'm the founder of Basilic Financial. We're a Bitcoin-focused wealth management firm doing some work in digital credit, author of Bitcoinization of Finance, and chief marketing officer at the space.
And my name is Konrad. I'm at Galaxy. Been in the space 4 years. At Galaxy, I look after distribution in the EMEA.
I didn't know until I was doing a podcast with Alex Thorne at the office that Galaxy actually services, some of these Bitcoin treasury companies. Is there anything you want to mention on that end? Or is Galaxy just, like, so big and well known? They're like the Goldman Sachs of crypto that people just kind of find their way there. And, not to, like, shill all of our products and services, but I just thought that was super interesting. I'm like, I didn't even know that. And I'm not the smartest crayon, but like, if I didn't know, maybe other people don't know. So just figured I'd.
Yeah, I mean, for better or worse, at Galaxy, we do so many things, and depending on who you are, you interact with us in a certain sleeve, and you think that's all that we do. Taking a step back, a high level, where we focus very much on capital markets in digital assets, Bitcoin obviously being the biggest one of that. We looked at Bitcoin treasury companies, strategy, to some extent with curiosity. We saw what Metaplanet did. We thought that was interesting. And then very much over the summer of this year, Q2, Q3, we saw kind of the whole industry explode, right? And as part of that, we thought, how do we actually get involved in this to grow the ecosystem overall? With kind of vision number one is this is a great wrapper to allow institutions to access the space. And so we thought very much about how do we position ourselves for Bitcoin's treasury strategies. We might be involved in the cap tables with some of them. And then it's very much thinking about how do we aid management of the Bitcoin treasury companies to increase value per share. And that comes best execution, storage, and then yield solutions in terms of borrow lending and derivatives. And very much being there with them as a full partner, helping them present the brand and also tapping in and educating their investor base.
Got it. And then Wyatt, you mentioned the two magic words of this month, digital credit, right? It's like amplified Bitcoin, digital credit. You want to speak on that at all?
Yeah, well, so I really kind of view like this Bitcoin treasury movement as like the Bitcoinization of finance thesis, playing out. So this is really about getting dollars into Bitcoin, or I guess euros if people still use those. But when you're doing that, so my biggest gripe with Bitcoiners a lot of the time is like poo-pooing finance, and it's like, yes, I have a ton of respect for the cypherpunks, but we don't get to hyper Bitcoinization without embracing traditional financial tools, products, and strategies to do so. And so we're really kind of seeing the proliferation of, Bitcoin into an equity, wrapper, which I do think is interesting. I'm not convinced it's actually like the best product to do so. But Tim, to your point, like we're seeing like, yes, preferred stock technically like equity, but trades and interacts more much like, fixed income. And I loved, Jesse Meyer's, graph when he's looking at, total, value store of value assets, worldwide. And then, specifically how MSTR is, suctioning off, or sucking out, dollars like into Bitcoin from all those store values. You really kind of have to, when it comes to digital credit, I think, be a more mature Bitcoin treasury company. You need to have enough Bitcoin, be largely over collateralized, a lot to offer some of these preferred stocks. And what it really comes down to, I think, is the market's perception, like the previous panel was talking about. And, when I'm talking to clients that are predominantly Bitcoiners that are interested in these products, like we have to understand we're playing fiat games and we're wading into traditional capital markets. So it's really all going to be about like the market's perceived perception of these different products across different jurisdictions. So there's a lot to work with there, but I am excited about what we are seeing early on.
And VJ, your seat at Gemini as counsel, I mean, that's got to be a wild seat.
Oh yeah, definitely.
And also, if you can answer all three questions, what are these things? What are the metrics? And what are they supposed to be doing?
So I think the way I see it is, you asked the question, why do we have Bitcoin treasury companies? What problem do they solve? And I think it's basically, that one of the longest standing complaints about Bitcoin is the absence of yield. So if you buy a Bitcoin, you put it in your cold wallet, 5 years later, it's going to have appreciated in dollar terms, but it's still one Bitcoin, right? So what Saylor introduced, I think, was this concept of Bitcoin per share. And so you use various financial engineering, tools and technologies from the TradFi world to accrete Bitcoin per share, so that, let's say today you had, 1 Bitcoin underlying your 10 shares. In 5 years, you have 1.5 Bitcoins or 2 Bitcoins underlying your 10 shares, and that's your Bitcoin yield. And so, I mean, that's pretty revolutionary, and I think it's pretty cool, and it is the merger of traditional financial world with Bitcoin. And so, in terms of whether it's good or bad, I mean, it's a natural progression. It was bound to happen, and yeah, I think it's good. But that's how I'd answer the why does it exist kind of question.
Got it. Anybody want to jump in with? You're selling shares into the market as an option. You have convertible debt. You now have these preferred shares. Is there something else structure-wise that maybe hasn't been introduced yet that's maybe obvious to you? Or how do you think through all of those levers as we're literally just creating a new industry here?
Yeah, well, it's interesting, Tim. And I do think, Saylor really kind of pioneered a new market. I'm kind of, dubbing it. So it's like fiat return on Bitcoin exposure. And so it's like, well, what wrapper are you going to put the Bitcoin in to get that exposure? And to your point, VJ, it's like, well, you don't have, yield native on Bitcoin, but can you get, yield on dollars via Bitcoin exposure? And I think what it really comes down to, if you're interested in being an investor in that market, is, well, how synthetic is your exposure to Bitcoin? And ultimately it'll be up to you as an investor to, make that determination of this asset allocator is, worthwhile and they're actually, producing value. But once you kind of open that door, I think, it kind of lasts for, a moment in time. I don't think this market is forever, for, Bitcoin becomes a unit of account, like dollar return on Bitcoin exposure is kind of pointless. But while we're here, very exciting.
Yeah, I'll echo that. I think about it. If I'm an investor and I want to have access to the space, what can a Bitcoin treasury strategy, a Bitcoin treasury company do for me that I can't do for myself? Are there ways that they can offer me exposure cheaper? Are there ways they can offer me exposure differently that I can't access to myself because of, I'm a retail investor, XYZ. And I do think Saylor has kind of showed you a nice permutation of risk slices that you can invest in, and open up that part of the capital market for me where I can get a more bang for buck than if I would do it myself. And then I think the thing which is going to be happening over the next year is taking inspiration from the Ethereum that's out there, is thinking about the operating business model, and then how can managers drive value there. And again, if I'm an allocator to the space and I just want one delta exposure, I have the IBITs, basically the cost ratio. I look at some of the vanilla treasury strategies, but then really it comes down to like, what are the opportunities that open up in that space in the capital markets that I also would not want to spend time following, where I can just allocate to a Bitcoin treasury strategy, right? And I know these guys have best storage mechanism. They're out there getting the best deals that I can't do myself. And it's ultimately allocating your capital to the best manager in the space, akin to what you could do if you allocate it to a dedicated fund. Right?
So I think that's quite interesting, because when you buy a Bitcoin treasury company, you're buying Bitcoin at a premium. I mean, if you had $100,000, you can go and buy a Bitcoin with that. Or you can buy a Bitcoin treasury company that, let's just say it's trading at an MNAV of 2. You're buying only half a Bitcoin worth when you buy those shares, right, with 100K. So you're buying it at a premium. But why are you spending that premium? The reason for that is all the things you mentioned, which is you're paying that premium for access to all these financial engineering tools that you wouldn't have access to as an individual retail investor. And you're paying for better security, better custody, better, whatever else, and also an operating income. So that's kind of one way to look at it. Like you could just buy a Bitcoin and sit on it, or you can buy less Bitcoin, pay a premium for all these things. And that's what you have to assess between different, treasury companies, which one gives you the best bang for buck when you're paying that premium.
So this is absolutely not financial advice, but to that point, shouldn't you just consider buying the companies that are trading below book as a strategy, not financial advice?
I mean, yeah, I actually personally don't see why Bitcoin, treasury companies would trade below book. In other words, if I were running a Bitcoin treasury company, I would buy back shares. And I wouldn't be religious about it. I don't think, that makes very much sense to be very puritanical about, I'm not going to sell my Bitcoin and buy back shares. Because if in my eyes, any management team that said that is actually failing their shareholders, because your responsibility, if you're running a Bitcoin treasury company, is only one metric, which is Bitcoin per share. So if you buy back your shares using your Bitcoin, you're improving your Bitcoin per share metric. And, that's what you should be doing. And that will instantly floor your MNAV at 1. It should, at least, right? But I don't think it's automatically the case, right? I mean, so you have to assess them on the different metrics. You have to see, okay, which one has a better operating company sort of cash flow story, which one has better expertise to deploy, preference share strategies, convertible bonds, and all these financial engineering tools. And so that's the assessment I think you'd have to make.
Since we're throwing around swear words like Ethereum, Kathy Wood, Anthony Pompliano, I'm sure many others have kind of talked recently about stablecoins and how, it's a really big story, maybe a bigger story than we initially thought as Bitcoiners. And maybe, maybe Kathy took 300 grand off of her price prediction or whatever. More to the point, do you think Bitcoin treasury companies, there's a way for them, maybe on the operating side, to incorporate stable coins because it's maybe becoming a larger story, a larger opportunity, or no? Or pass? Next question.
That'd be a next question for me, Tim, but you guys more than welcome to.
I mean, high level, I think they will be users of stablecoins. I think they should be users of stablecoin if they have a choice for it, to drive digital adoption, of which ultimately Bitcoin will be a beneficiary. And day one, with thinking about Bitcoin treasuries as equities, right? And soon they'll be tokenized equities. And so one of the underappreciated benefits of Saylor's impact is actually the fact that banks, risk departments, their prime brokers actually had to think about MicroStrategy. What is MicroStrategy? What are the drivers of risk here? Can I take it into my prime brokerage account? Can I borrow and lend against it? Right? And that's really kind of laid the pathway to accelerate these conversations versus the ETF. And, Galaxy, we've tokenized our shares. I'm pretty sure there will be Bitcoin treasury companies out there which will be tokenizing their shares, which will become eligible collateral. There'll be some debate, which L1, etc. But I do think that is a path that every Bitcoin treasury strategy if a Bitcoin treasury company should be adopting and thinking, how do we drive digitization and on-chain activity forward? Because that should be aligned with a North Star of self-sovereignty.
Okay, yeah, I take it back. I do want to jump in on this. So, I don't know. I am not particularly interested in stablecoins. I think it's just a way for the U.S. government to sell more debt. So I'd much rather, we're talking about digitization. I'd much rather, Bitcoin treasury companies invest in an operating business that supports Bitcoin financial services, whether that, be lending or whatever else. Like, I think everything else is a distraction, but ultimately it will be up for the market to make that decision, how your shares will trade via your competitors.
What was the question with stablecoins again?
Is there an opportunity for Bitcoin treasury companies to, on the operating side, incorporate stablecoins or like maybe an example would be a business line, like almost try to become like a Circle or a Tether or somehow incorporate it into the operating side of the business?
I mean, I guess it's potentially an attractive operating business as long as treasury yields are high, as with, Circle as a business model. But yeah, I mean, potentially.
And you've mentioned maybe we all did kind of the North Star of Bitcoin per share. What are your thoughts on the strategy of strategy saying, hey, we're just going to kind of have our operating business stay steady and maybe, of course, you always want it to increase cash flow wise, but you want it to kind of stay steady so that you have the proper tax treatment when it comes to these rock dividends. Any thoughts on that, on like operating business and wanting a bunch of cash flow to buy more Bitcoin versus just kind of not having too much profit on the operating side? One, so that the Bitcoin can really take over the narrative and the story and be the driver, but also for any sort of tax implications such as the rock dividends from Strategy and now Strive.
I mean, I would say in these early stages of adoption, it probably makes sense to have that kind of a clean narrative where it's just all about the Bitcoin, all about the financial engineering, and the operating business only exists primarily to pay salaries, listing costs, expenses, and the like, so it doesn't eat into your Bitcoin. So keeping it kind of clean and pure like that, I think makes sense in these early stages. But if we're talking about long-term adoption and kind of, I mean, we're going to move through phases, right? We're at the store of value phase, then we move into medium of exchange phase, and then we move into unit of account phase. And theoretically, I think, I guess most of us in this room expect that there will be a day where every company in the world is a Bitcoin treasury company, right? If that's kind of unit of account. So yeah, I mean, that's a world where if you're a cash cow and you're generating massive amounts of cash to throw into your Bitcoin, I mean, those guys are going to be the winners, right? I mean, Robinhood is talking about adding Bitcoin to their balance sheet. I mean, that's a company with, tens of billions of dollars of cash. If Apple suddenly became a Bitcoin treasury company, I mean, that would be the Bitcoin treasury company to buy because of the amount of cash that comes in, the amount of Bitcoin that they're going to accrete. So I think at some point the narrative will switch. But for the moment, I see Saylor's argument.
Yeah, well, I think it's really interesting. And if you are an executive at a Bitcoin treasury company, you need to be extremely clear about what story you want to tell to the market. And Tim, to your point, where it's like, okay, well, if I'm Apple, I have a ton of cash and I add Bitcoin as a savings vehicle to my balance sheet. Are you a Bitcoin treasury company? You're not deploying like the MSTR playbook, so you shouldn't anticipate like the market to value your stock the same way as it values MSTR. If you are doing a more aggressive only MSTR strategy, issuing different types of debt to acquire more Bitcoin, or if you have like an operating business that has a lot of stable or predictable cash flow, and then adding more Bitcoin and kind of combine the two, you need to be able to communicate that to the market, because we're using this term like very broadly, and it's like, what does it actually mean? It's like, well, nobody knows, and so it's going to be advantageous for you to be the driver and control your narrative and communication channels, so your stock can be valued appropriately.
Yeah, I mean, I don't have much more to add to that other than I think narrative is key, and then depending on what mindset you or an investor has and on what narrative you give them, I think what Tyler said is to some extent underappreciated but true. A bunch of treasury companies should be trading like a closed-end fund, so at a discount. And then the premium is reserved to those who execute.
Awesome. We have a few seconds left. Let's just go down the line. Where can people find you online?
VIjay Selvam is my Twitter handle. That's probably the best place.
Yeah, most active on Twitter at _, basilic.io or whiteorock.com.
OnlyFans, no, galaxy.com.
Best answer of the morning. I'm at Tim Kotzman on Twitter. Thanks, everybody. Appreciate it.